Just a second. Okay, and we're live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Today it's Friday, the 28th of June, and it's a there are some important news that we're going to look at in a second. And there also there's a big deal in Europe, which is the French election going on this Sunday. And we'll see what that means in terms of, if we always look at things with our investor eyes. Okay, so there are things that we got to watch and opportunities as well in situations like important elections like this. Okay, let me start sharing my screen first. Okay, so okay, so as you can you see my screen first? Yeah, perfect. Okay, so as you can see, the big issue that we had this this time is that the hard right is for the first time probably, at least is polled to be getting a majority of the seat, just about short of the overall majority of the seats in parliament. Now, France is a semi-presidential democracy, so the actual executive power stands with the president and not with the prime minister. But the prime minister is then appointed by the president, and the House of Representatives has got like a supervisory role. Still, it will make things very difficult then to manage if the president doesn't have at least a working majority, even if it's kind of minority government in place in parliament, because obviously their wings will be curtailed by the by the right to try to stop them at every decision. So what we'll see what kind of things can be expected by if the existing government basically managed to scrape through, or if the right was to win the elections. Now, obviously, a situation status quo exactly as it is now, even with a reduced majority for the governing coalition, it's good. I mean, will be seen as good news for the market, and the win of the right will be seen as an unknown, not so much as kind of bad news, obviously, but it depends of the decision that we'll be making. And there are some lessons that have been learned as well. Just if we look at what happened when in the UK, for example, Liz Truss went to became prime minister, and all of a sudden try to introduce changes that were a little bit too radical that the market wasn't prepared for, and pretty much the markets pushed her out of pushed her to resign in a way, because obviously not something that she could control, and and the supporters were not ready to see the UK sold off to the highest bidder. Now, this is a study by Oxford Economic and Alliance Research to see the kind of the different government scenarios. So this is what the situation is, the pre-election situation at the moment. And the thing that you got to concentrate as well is that this fiscal deficit, okay, because this is what markets react to more than anything else. Okay, and if the current government basically still maintains a minority government for Macron's party, situation will not change very much. Will pretty much carry on as it is, expected until now. Maybe there will be some more. They plan to spend a little bit more in 2025, but the situation will not change radically from what from the current situation. Now, if the hard right wins, though, they are just remember that most of the hard right government are demagogic governments, so they are wanting to give back to the people as much as they can to gain favor. That means, generally speaking, higher spending. Okay, so the fiscal deficit is expected to go up quite a lot if the right was to win a majority or was to be able at least to create government. Whatever happens, Macron will still be in power at the end of Sunday because the presidential elections are not due for another couple of years. But they remember that the parliament has to approve the fiscal decisions, and that will have a big effect on how the markets look at in particular French bonds. And remember that these are the France doesn't have even a central bank like the UK has that can then take actions in the market. Anything that goes wrong will need to be actioned by the European Central Bank, which is not, by looking at the past, doesn't tend to take action until the situation is really, really, really bad. This is what's happening. This is what's happening in the markets right now. Okay, so we see the extra cost. Basically, because people see this as more risky. Okay, the market requires a bigger top up to buy French bonds compared to euro bonds emitted by other countries like Germany, for example. So the situation that we got now, it's higher than what we are seeing in the two crises of recent times. Even during the pandemic and during the 2016-17 crisis. So we have a level where the French bonds are priced now at 116 basis points above the European equivalent. And we're talking about long-term bonds. So what could happen for us as investors? This, for me, just offers a buying opportunity in a way, because there is the kind of yields that are available through now French bonds are a lot, are very much higher than the alternatives available, and this situation will, as you can see from what happened in the past, will eventually normalize. Okay, and as the yield comes down, obviously remember what you pay for the bonds is a price. The price that you pay determines the yield that you receive on the bonds. But as the interest rate starts coming down again, the price of the bonds will go up. Okay, so it's the same thing that we were talking about for the US bonds. Okay, so you secure yourself a high yield while at the same time having a chance of a chance of capital appreciation when things normalize. Let me just make this bigger. So, and these elections obviously cause more volatility, and nothing. So the best way to observe it is looking at what's happening with the Swiss franc, for example. Okay, so the Swiss franc is seen as a reserve currency for whenever there is kind of like trouble of any sort, whether it's a war or whether it's like political uncertainty. So again, there is a much higher volatility, and a lot of attention, a lot of capitals have flown into the Swiss franc to basically weather the storm. Okay, and so that, depending on what happens during the election, we are likely to see, a lot of volatility, just in the days. I'm talking about, next week, from when the results start coming through, and some of this could be beneficial to the Swiss franc. But whatever, if you are, so be aware of this if you are active in the currency markets, because especially the European, the euro and the Swiss franc and the pound, so the European-based major currencies are likely to see quite strong swings. We already can, if I can show you as well, by looking at a chart of the where are we? The European, the euro Swiss franc. Now, can you see how over the past like 3 weeks, really, over the past three weeks, we have seen the Swiss franc. Basically, this is in currency terms, it's a massive move, almost like 5% appreciation. There has been a bounce since in the past, past week and a half. But even now, where we are right now is 3%, a 3% swing in, during, I said, the end of, from the end of May. This is the top here was the 27th of May to where we are right now. And this is again for the reason that we've been talking about. This is basically the French election campaign. Okay, and the reason why we're seeing these kind of this kind of moves. So it's not just the euro, but also we can see the same with the British pound against the Swiss franc. Similar sort of moves. So yeah, that is something like really to keep an eye on. In terms of other news, we'll see what we have in the economic calendar. This week has been fairly light from the point of view of economic news. We've had inflation figures in Canada that were slightly higher than expected. Okay, like 2.8 rather than 2.6, but the common CPI year on year has actually declined to 2.4%. But these numbers that are the current trend is stronger than expected, so it's unlikely that we'll see another cut in interest rate at the next monetary meeting. Remember, the Canada cut interest rates this month, and where other countries like the US didn't. Another bit of news on Wednesday, we had new home sales, which was a lot weaker than expected, and we'll see in a second. We'll see more granular results. We also have the job figures again. We look at a new figures in a moment. Let me just update this. And also yesterday we had GDP that was quarter on quarter that was as expected, and you can see the housing market that is getting weaker all the time. So we'll see figures. These are figures are month on month, but we'll see in a second the yearly figures as well. Today we already have the final figures for the GDP in the UK. And later we'll have GDP again for Canada, and the PCE price index for the US, which is the measure of inflation that is the favorite one for the SEC, for the Monetary Committee to set interest rates. So at 1:30 p.m. we have that, and also we have at 3 p.m. the consumer sentiment. These are both news that can move the market, especially the PCE, and especially if it is announced significantly different from what it's expected. So a higher value than expected means that it's less likely to see a cut in interest rates, so might have an immediate kind of push to move yields on bonds slightly higher. A lower inflation will then re-encourage the market that a cut is coming and that yields will come down as well in the bond markets. Here, level slightly more granular figures, because this, I think, sometimes aggregate are not the best way of looking at things. So things that are noticeable. So let me just refresh this. Where are we? This is Friday. Not this week. Where are we? Okay. So have a look at this. New home sales. Okay. And so if we had 2% the previous value. It was expected to see basically a 2.9% growth month on month. Instead, we had minus 11% drop. So this is quite big. Okay. So it's 14, almost like 14% worse than expected. Okay, and even if you look at yearly, kind of like at the May figures in total are, much lower, much lower than the month before, and much lower than expected. What I keep an eye on as well, often is the bond auctions. Okay, so we see on Wednesday, we had 4.55%. The new auction is a 4.33%. So nothing has changed in terms of the interest rates hasn't been changed. Okay, but what the market is willing to pay has changed. So the market obviously they are expecting cuts to come, so they're willing to pay more for the same duration bond, and that brings the yields down. Where are we? Look at the job figures. So other things there's kind of like fundamental figures, showing, for example, the durable goods orders coming down all the time, keep being negative. Wholesale inventories that are actually building, in the sense that things are going unsold. Like non-defense goods orders again declining. And then you come to the usual jobless claims that keeps ticking higher. Okay, so this is kind of like sometimes it's counterintuitive. We see, the initial jobless claims have come down, but they're continuing. So this is the one I've looked at more than the first one, because this is the total number of people that are on unemployment benefit. And again, it's only only recently we've gone above 1.10 million, and we are now kind of keep ticking higher. And all these figures, as you keep looking, like GDP growth rate went from 3.4% to 1.4%, although it was expected, but it's dropping all the time. And that's the other thing that I wanted to show you: pending home sales. Okay. And again, it was like expected to see an increase of 2.5% year on year. Instead, it's been a drop of 6.6%. So big difference. Okay, so this is making people nervous. And it is, when you go then and look at the charts, for example, for the stock indices and for other asset classes, it is reflected in the charts that you see. So another thing that's interesting to have a look at as well, it's because the house market is starting to struggle. We are seeing now the mortgage rates that are slowly dropping. So they're gone from levels that were above 7% now. So this is now the 30-year mortgage now 6.86%. Again, with the interest rates not having changed, the banks are seeing, obviously they're in like the commercial business, so they're trying to match the consumer demands. Okay, so they're trying to reduce interest to get more customers. And even here we see another auction, a 7-year note auction, 4.65 to 4.27. So these are kind of like a lot of bond traders are taking positions at much lower yields already, and at a lot just assuming that they're going to be a lot bigger cuts than the ones that have been announced. And remember that if we look from now for the next till March of next year, the market has priced in about 3 cuts, but some of the position that we're seeing now the bond traders taking assume there's going to be a lot more than that. Okay, and today this is, by the way, it's important. In 30 minutes we have unemployment figures for Germany, obviously biggest economy in Europe. Where are we? So that can move the markets as well, and this will have all at 1 hour before the market opening. We have the PCE figures, personal income, and also Chicago PMI and Michigan consumer sentiment, that it's coming at just after the market open at 10 o'clock. Okay, so having seen this, let's go into, and this is kind of an article that shows you what a lot of the bond traders are thinking. Okay, so they are starting to position, and this is kind of like in the options market, to position themselves for 300 basis points of cuts by March of next year. But I mean 3%. Okay, and at the moment, what's priced into the markets is a 0.75%, so 0.75. So that would be like 4 times as much, as the market has priced in at the moment. Okay, so there are different reasons why this could be happening. It could be simply as options are used for protection as well as for speculation. So it could be, that some market participants are protecting against an unexpected downside, and at the moment the market being at pretty much at the all-time high, that protection, the cost of that protection is fairly low compared to what it would be if the market actually starts dropping down. Then it would be a lot more costly to buy put options in that case. Okay, now let's start looking at some crypto news. So in terms of prices, since we were here last week, Bitcoin hasn't really done much. There was a big drop over the weekend. Let's have a look. Let me just bring it to a bigger chart so we can see more clearly. Okay, so what happened here? This is a daily chart. Let me just move the controls, always in the way. Okay, so this is where we were on Friday. Here. Okay, about 65,000 when we were having this session last week on Friday. There was a sharp drop over the Sunday and Monday that brought the prices down to around 58,000. We have since rebounded, and we kind of like a ping pong in between 61 and 62 for the rest of the week. Now there are reasons, I mean, we can assume, obviously it's easier said than done, but we can having look at the news that came into the markets around that time. The main bit of news is that, how many of you remember the name Mt. Gox? Okay, that was the first and original Bitcoin exchange, and funds are being locked in Mt. Gox for the past 10 years pretty much. Okay, and they just announced that they are going to start refunding Bitcoins to account holders from the 1st of July. Okay, so that is obviously quite an amount of Bitcoin. And if you're thinking about, especially, the idea is that, so these are funds that have been locked since roughly since 2014. So if you look at what the price of Bitcoin was in 2014 and what it is now, it means that people that actually get their Bitcoins back, they get them back when Bitcoin is at a much higher price than when they bought them. And it's obvious that, not everybody will want to sell them, but some people will want to obviously put the cash in their hands, go and buy themselves a house, a car, or whatever, because what they paid for them at the time and what they're worth now, there's a big gain in the price difference. So the market, in a way, was expecting like a Bitcoin dump, okay, coming in July, and also there are news that the German Bitcoins held by Germany and Bitcoin held by the US government have been moved to exchanges, ready to be sold. So, more than one reason, to to be worried about Bitcoin. But the interesting things is that, this is what Bitcoin shows its resilience, because even if, we push back into below 60,000, there has still been a quite interesting, so at that price, we can see that there are a lot of willing buyers coming in at around around that price range. If we see also what happens with the ETFs, we go and have a look at the ETFs flows. Okay, so we can see there's been 1, 2, 3, 4, 5, 6 days of consecutive outflows for about $1 billion, and even, I mean, this is only goes down. I think it'll be more than that, to be honest with you. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So roughly like 2 weeks of continuous selling pressure. Okay, and then in the last 3 days, we have that as turned around, and we're seeing some capitals coming back. Not a lot, but 31, 21, 11 million, so an extra 60 million or so. We have, again, the total new money coming in has been like 15 billion, and this is the composition at the moment. As you can see, again, the BlackRock has overtaken Grayscale now by over 10%. And I think it's probably just a matter of time if we carry on, because Grayscale carries on seeing outflows. Okay, so it might take another few months until we see Fidelity as well overtake Grayscale, unless, as I say, they are changing their fees on the account. So we might see that now the outflows from Grayscale actually diminish from now on. But that's it. So strictly speaking, the ETFs have been like a catalyst, but they haven't really caused this current drop of prices in Bitcoin, although they haven't helped. But at the moment, the things have stabilized in Bitcoin terms, and all these extra. So you can only imagine, you can only assume, that why start repaying Bitcoin now? Why the authorities and all the Bitcoin that they confiscated, why are they transferring them to exchanges now? So, and by the way, it's quite funny from the US as well, that first of all, they attacked Coinbase, telling them there was an illegal exchange, and then they use Coinbase to go and sell, their Bitcoin, so it's it's funny to watch. So I personally, the way I see it is that what we are seeing right now is all these extra supply and coming from miners that are cashing in basically because they need to pay their operations, especially weak miners that cannot sustain their operations with the lower rewards after the halving. So all that extra supply, obviously, that as they try and stay alive, all that extra, so they're selling their reserves of Bitcoin. So all that extra selling pressure is being slowly absorbed by the market. Okay, and it just follows the same pattern that we have seen in the previous post-halving price range in during the other cycles, the other bull cycles. So nothing different from that point of view. What we can do is have a look at what it is, what are the real metrics that you should be looking. And if we see the adoption curve of Bitcoin, we're on track to get to about the 1 million per Bitcoin value by in about 10 years time. Okay, so this is kind of like I will describe that as fair value. It wouldn't mean there's the market top, because there's always going to be spike, but it's fair to predict or expect the roughly each Bitcoin would be worth like $1 million in about 10 years time by 2035. And you can see also that the curve is flattening in terms, obviously, as Bitcoin is adopted, but we're still very low. We still have 5%, and probably this level will be reached once Bitcoin is a market penetration of 25-30%, which would be at the very, very even the most optimistic prediction would put that at least 5 years from now. And this is another really interesting way of looking at things, So if you hear what you hear in the news, when you hear from politicians, you're saying, well, the inflation is being under control, like 2-3%, and I know that there has been a trouble, but we are keeping under control. But really, what you're looking at is not just the inflation, but is the sum of inflation plus extra money supply, which is basically is currency debasement. Okay, because when we had all that extra money being printed during the pandemic, but everybody was at home, not working, and still receiving full pay. So how do you think they paid for that? They didn't pay for it because they say, look, we got like a bunch of gold in a central bank, we'll give you a bit of that gold that you can spend. No, it's not that at all. They are just basically saying, well, you know what? You have $1,000 in your pocket. Guess what? That $1,000 now is worth $1,300. Just like that. And that extra 30% is basically inflation. Okay, because it means that there is more money around to buy the same things. Just imagine, and I know that a lot of you are property investors. Just imagine the price of housing is also determined by how much people are able to borrow. Okay, because obviously, if you're buying a house for the first time, you go to the bank and you show them your figures and whatever, they tell you, we're happy to lend you up to this amount. Now, they do an affordability check, so the amount that will lend you depends on what they think you can afford, okay, based on your income and your expenses and everything else. So obviously, that affordability check depends on the interest rate. So if the interest rate is high and you have to pay a lot more on the loans that you receive, it means that you can afford less. Okay, so you can spend less on the things that you buy, in this case housing, where if the interest rates are low, they can afford to lend you more because you can afford to repay it. Because if you get I don't know, $100,000 loan at 5%, would cost you $5,000. At 1% will cost you $1,000. Okay, so it makes a big difference in your borrowing potential, and then that has an effect on prices. Now, in this case here, we can see that the yellow line being the CPI, the inflation, which is always remained within generally acceptable levels, even if it's been pretty high at around 5. Yes, touch almost 10% during the pandemic. But this extra spending, extra money being generated, which is like, as you can see, the monetary expansion, and adding to that the this dotted line is the monetary expansion, and the solid line is once you add the inflation to that. Okay, so this white line is how much the US dollar has actually debased since 2018. So if you just look at, so the peak was at 30%. So this means that in 2021, you had some savings. If you didn't earn 30% or more in your saving, you have lost purchasing power. Simple as that. But if you look at the average here, if almost the average since 2018 has been about 6-7%. So this is a sum of new money being printed and inflation. Okay, so you're thinking about how your money, the money that is working for you, unless you can get these sort of returns or better, you are losing purchasing power. So you will be able to buy less from your savings that you are able to buy today. And it's a difficult thing to take, because it's money. It's just a language that we use to convey value to one another. But what money represents is your work. At the end of the day, you accumulate spending power by doing something useful, and what you don't need to live on, you keep to spend at a future date. And the idea is that purchasing power, or when you generated that value, should stay constant, pretty much allowing for supply and demand, but should stay constant through time. And what they have done through this beautiful invention that they created, in 1971, what they have done, they found a way of robbing you of your value that you generated without you even realizing it's happening. And this is a really good way of visualizing that. So pretty much the white line is the amount of money that is being stolen from you. And if it is below the 0% line, which it very rarely is, it means that actually, oh, look at that, your money now is worth more than it was worth before, but it doesn't generally last for very long. So in crypto news, the big news from yesterday is that there has been a filing from VanEck for having a Solana ETF. Now, this is just the initial filing, so it doesn't even require, the SEC to reply to this yet. So the earliest date that we can think of, if this was to get approved, and there is a big if, because it will need to demonstrate that Solana is not a security, but it's a commodity. If this was to get approved, the earliest it could happen, it would be March of next year. Okay, so nothing to get too excited about, but it's obviously the market thrives on news, and if we see what happened to Solana's price yesterday, okay, 135 to 150, so over 10% news reaction. That's on a 15-minute chart. This is when the news came in. Can you see how quickly the market reacts? Yeah. So this is when, at the filing was announced, 139, boom, within an hour, it was a 150. Okay. So things happen very, very quickly. Normally, what it's like in any market is they always say, kind of buy the rumor, sell the news. So this is what we're seeing in Bitcoin as well. Like, everybody was buying Bitcoin before the launch of the ETFs. When they actually launched, the actual price dropped before before going up again. On other news, there's a couple of things to show they're kind of like quite big. Okay, this in particular, Coinbase and Stripe forge a new partnership for fiat to crypto solution. Okay, so this is a partnership to improve the kind of on ramp and off ramp for customers, that move from fiat to crypto and vice versa. Now, if you think that Stripe, I don't know how many of you that I know many of you that run their own business will use Stripe as a payment provider to take credit card payments and debit card payments from customers, and they are already used by millions of businesses across the world. So the ability then for Stripe to work with Coinbase to then allow easily to on ramp and off ramp will then mean so it's talking again about spreading the word in a way. So it'll make it easier for businesses to accept crypto payments, or also to swap, and maybe they want to keep some corporate savings in crypto rather than in dollars or in other currencies. So Coinbase will integrate Stripe's fiat to crypto on ramp, enabling users to purchase cryptocurrency using credit cards and Apple Pay. Okay, so broadening the accessibility and usability of digital currencies. Okay, and also USDC will be used for to do the opposite as well, for converting back from crypto to to fiat for businesses that need to do that. So this is quite a big thing, and again, it's another brick in the wall, So big things that help to make it easier, and crypto will not be a mass market until there is a really easy way to spending, to just tap as you do now with a card, through your phone or another way. And this is one of the things that will make that possible. And the last bit, and then we'll take some questions, or we'll talk about a few other things. This is for my Australian friends. Apparently, the tax office is collecting over a decade of crypto transaction data. Okay, and so they will be able to look back if tax returns have been filed or not. So, I mean, I don't know how true that is, but they know that they have started this crypto data matching program from any crypto exchange legally operating in Australia. Okay, so this is coming straight from Coinly. So whether using Binance, Coinbase, CoinSpot, or another, they will be able to collect your data. Okay, so bear that in mind. And whatever you need to do, I say we don't give any financial advice or any tax advice, but I'll just say, be careful, put your affairs in order, because with blockchain transactions are there forever. Okay, so then authorities eventually will be able to scan, and by the time they get round to the idea and they know how to do it, they'll be able to do it automatically, and so expect something to come to you eventually, if there is some irregularity. Okay, I think this is pretty much what I had to share with you. What else? Yeah, I think pretty much we went through all the things that I prepared for you. So let me stop sharing, and let's see what if you have any questions. Remember that your education depends on the quality of the questions you ask. So if you don't want silly answers, then don't ask silly questions. Chad, sorry, you wanted to ask something?
Just put pressure on all of us.
No, sorry, were you just saying hello, or do you have a question? No, no, it's okay. All right.
Morning, everybody. How are
Good
you
morning,
all?
good morning, Kerry. How are you?
Yeah, very good. Let me switch on my video. So, just a question around obviously what has recently affected the Bitcoin price being this, and I'd seen the news before, this Mt. Gox repayment. Any kind of, and I know I'm not going to ask you to guess, but I mean, any kind of data as to when the market won't be affected by that anymore? I mean, as you said earlier, it is a huge, significant amount of Bitcoins coming back into supply. Hence, with any economics, you can understand that the price has been affected to some extent. But what are the factors that we need to consider for that to no longer be as big an issue as it was? Because it's not really negative news. It's not like a FTX crash or something like that.
No, but obviously it's kind of supply and demand as usual. So more supply, just it causes a pause because it means it's easy. There are funds there are willing sellers, and also there is still there were quite a lot of liquidations that happened when the price went down below 60,000, but there is still a significant amount of speculation on Bitcoin. So I think. Generally what happens is that those, you get that the speculators, they either get rinsed off by moves like this, or they get bored because the price is not doing anything and they move somewhere else. Generally, I would say it would take around, what we've seen in the past or previous cycles, it would take anything between 10 and 16 weeks, from the halving. We were ready now. So 15th of April. So we've gone already 6 weeks since the halving. So I would say another 6, a month and a half to 2 months, probably we can expect a sideways price action before things start getting interesting. And it's pretty much what we said all along, like end of September, beginning of October. So those are the times where we should see some significant moves. If Bitcoin starts being a bit steady, what we might start seeing is I don't know if you guys have noticed that the altcoins in particular have dumped really, really heavily, a lot more than Bitcoin, and we might see that reversing again simply because of trading action more than anything else, by people then moving where the volatility is. But yeah, any real moves still haven't happened since the halving, so we're still in waiting mode, and during this time is just like distribution, and we're seeing all the kind of big holders that have keep accumulated around 60,000, and keep divesting when price gets to new all-time high. So yeah, the other thing to watch is start waiting to see some bankruptcies from smaller Bitcoin miners that get absorbed, because again, those are reserves of Bitcoin that will hit the market when that happens. And that's why every time there is a halving, there is a period of pause between, before prices start growing, because of all these things combining together.
Thank you, Luke. I was actually going to set that other point you raised. I was going to touch on and ask you a question on it. So I know you showed us a week ago the graph of the consolidated altcoin dump. Have we seen much more of a dump as per this Bitcoin drop?
Not really. If we can have a look at it, we can bring it up and have a look at it on the chart together. So which one was that? So if we see, actually this week, you can see that the alt market cap has actually gone up. So the last so today, 1, 2, 3, the last 4 days I've seen about 40 billions in value, from 560 on Monday to where we are today, about 600 billion. So as this is when Bitcoin dropped on Monday, Sunday and Monday. So the same thing, happened to the altcoins, but they are now being, recovering, and we can have a, if we can check, this is the 7% from the bottom. And if we look at Bitcoin, let's see, 5%. So they have, as you can see, they recovered a little bit faster than Bitcoin, but then obviously they are dropped as well faster than Bitcoin. So it's always, I mean, as I told you before, kind of like the old coins are a Bitcoin on steroids in a way. Okay, so when Bitcoin's price goes up, the old coins go up a lot more. When Bitcoin goes down, the old coin comes down a lot more. So that's the always to be to be remembered. And especially if you are active in the kind of like meme coin market, that's even, that's on coke, not on steroids. Absolutely. We've seen, I don't know if you, yesterday there was a debate between Trump and Biden. So Biden didn't do very well, and the Biden coin or something, whatever it was, he actually crashed overnight. So that's if you do play in the sort of playgrounds, then be careful. Okay.
Thank you. Much appreciated.
You're welcome. Okay. Will you have any other questions?
Luca,
Yeah. Hi, Eric.
you mentioned what changes next week. Can you tell it again?
So yeah, it's all to do with the French elections. So especially because France is central to the European project. So there is that already there was a big uncertainty in 2017, the previous elections, so where the possibility that France would leave the European Union was kind of priced in. There isn't so much that worry at the moment, but still it's a big uncertainty about what would happen if the hard right comes into power, and what kind of decisions will they take. And I think the market it's ready because it's raised the volatility. So the price of doing anything now it's more, but any market participant that provides French related product wants more for taking that risk, for any, especially as European equities have been a good investment over the past few months. So there is always the possibility of a change in policy from one of the main players that could affect the markets fairly heavily. So at the moment we can only assume the polls are that just about the current government will stay, the coalition will stay in power, but remains to be seen when the results come in. So especially Monday and Tuesday, as the results are coming in, there should be a lot of volatility in all European currencies, including the Swiss franc. Swiss franc, because it's seen as a safety, so flight to safety. There is any, especially if I assume that if the right was to win the election, then probably the Swiss franc will jump in price, and vice versa. If everything continues as normal, then probably the Swiss franc will go back to the average that was before it started appreciating. So it will drop a little bit in value, but we can't tell which one, which way it will be at the moment. We just have to be ready, and if so, there are things that you do. Trading, it's easier. You just close positions, and you stay out of the market, or you do particular thing to take advantage. If you're a little bit more aggressive, but it's a little bit more difficult when you have a whole portfolio. And how do you protect your portfolio from big events like this? And this is where what we were talking about before. Options can be very useful, because instead of having to kind of put stop losses or protect your investment that way, you can just simply buy an instrument that will make you earn money if your stocks lose value. Okay, and so by doing that, you can then keep your portfolio as it is, because even if it drops 50%, well, you make money with your options. If things carry on as normal, then you only pay basically insurance, which is the premium for your options, which is which is at the moment, because markets are near the top, it's very cheap.
Thank you. Thanks very much.
Okay, you're very welcome. Okay, any other questions? No? Okay, if there are no other questions, I will leave you in Jonathan's capable hands. And Jonathan, actually, are you there? I can only see your photo.
There we go. Oh yeah, I am, but wrong camera.
Yeah. What do you think, Jonathan, of doing like that Cardano session that we talked about, and just going in and diving maybe into like DeFi on Cardano and other specific projects? What about doing it in a couple of weeks' time?
Yeah, that sounds good. There's certainly lots to talk about. Yeah, we could do
No,
that.
definitely. Well, it can be one session. We'll see how far we can go in 45 minutes, but we'll do what we can do, and then we can carry on we do another one the following month. Look at something else, because I think that you probably will need one whole session just to look at DeFi. I can imagine. Once each.
Oh, one section of DeFi. Yeah.
Yeah, exactly. We just give an idea of the kind of things you can do.
Yeah.
And why crypto is so exciting, and the alternatives to real fi. So that would be interesting. Yeah, let's do that. Let's put it into next week. So not next Friday, but the one after.
That's into July, isn't it?
Okay.
12.
And we'll have a chat before so we can plan the session. Okay.
Yeah, that looks good.
Fantastic. In the meantime, as usual, Jonathan will run his Cardano session today. So the link is in the chat box. So I encourage everybody to go and follow that, because I talk things more general terms, but Jonathan is really into the nitty-gritties and will show you exactly how things are done and what you got to be careful of as well. Okay, so have a great weekend, everyone. Don't stress too much about the French elections. If you can, stay out of the market, just wait for the craziness to go through. But there could be some good opportunities, as I say, next week. It could be others, let's say, purchasing French bonds, or even some extra volatility on stocks and shares that can give some decent buying opportunities as well. Okay, so have a look. If you're interested in playing your hand in this, then do a bit of research over the weekend. Otherwise, just sit on the sidelines and watch, because even if you don't take any action, you don't buy or sell anything, just simply observing what goes on in one of these events. It only happens once every few years. It's very educational. Okay, so we'll talk about it. We'll see, and by next week we should be able to comment on what went on over the weekend. All right, so have a great weekend, everyone. Enjoy the sunshine if you are in the UK. At last we can say that, after so many months of rain and horrible weather. And I certainly will. And I will see you again next week.
Thanks very much, Luca. Thank you.